You're watching a pristine product roll down an assembly line right before it comes to a dead stop. Small businesses rarely fail because they make a bad product or because they can't close a sale. They fail because their cash flow gets squeezed dry. Most owners treat bookkeeping as a retroactive chore. It's viewed as a necessary evil that gets pushed to a Sunday night or scrambled together right before tax season, mostly to keep the IRS happy. That mindset hides a massive operational danger. When a customer pays late, a vendor bill gets buried, or a subscription charges twice, these micro-delays start piling up. A business rarely collapses from one massive, catastrophic event. Instead, the cash bleeds out slowly through the accumulation of these tiny administrative frictions. Every hour an owner spends categorizing receipts is an hour they aren't physically delivering the service they actually went into business to provide. Their attention is entirely divided. Look at this timeline to see how the math plays out in real life. We have a scheduled incoming payment on day 14 in green, but a critical outgoing expense locked at day 7 in red. That creates a 7-day gap right in the middle of the month where working capital falls short. Standard end-of-month bookkeeping completely misses this. Because the books are only reconciled after the month closes, this mid-month deficit compounds unnoticed until the damage is already done and the bank account runs dry. Because historical bookkeeping focuses on what happened weeks ago, it provides no visibility into the liquidity gaps happening on a Tuesday afternoon. Take a typical two-person consultancy. They bring in enough revenue that casual back-of-the-napkin math no longer works, but they don't have the margins to hire a full-time finance team. This places them right in the operational gap. Here is the first bottleneck. A client project wraps up perfectly, but the team is busy pitching new work. Drafting the actual invoice gets delayed by 3 or 4 days. Second, a client forgets to pay that invoice. Since no human has the free time to monitor the ledger daily, unpaid bills sit silently, and no follow-up is sent until the invoice is 60 days past due. Finally, reconciling bank statements is continuously pushed off. It's a tedious process, waiting until the quarter's end when the owner is already exhausted. The business earned that money. It technically exists on paper, but it remains trapped in an administrative void simply because no human has the dedicated time to move it. Solving this requires changing how the back office operates. This is a sleek mini PC sitting quietly next to a network router. It's the askingAi AI Agent mini PC. It moves bookkeeping into continuous physical infrastructure by running a dedicated, locally hosted AI agent. Cloud-based accounting software has a structural limitation. It is entirely passive. It only processes data when a human explicitly remembers to open a browser tab. This dedicated hardware runs on Ubuntu server, which means the AI agent operates ambiently and continuously. It does its work completely independent of whether the owner's laptop is open or closed. Removing the requirement for human initiation allows the system to function autonomously in the background, keeping financial records current without waiting for the owner to find time on a weekend. Watch the drafting mechanism. Nodes labeled Time Tracker flow into a draft invoice hub. Next, the enforcing mechanism tracks aging, queuing an alert at 14 days. Finally, reconciling. Incoming payments pair with open invoices, clearing them instantly to leave a clean matrix. By automating the drafting, enforcing, and reconciling steps, the agent actively eliminates the human-induced micro-delays that cause the cash flow bottleneck in the first place. With the agent running in the background, the owner shifts back to the floor, confidently engaging with clients on an active workshop. They are completely engaged in their trade, rather than buried in data entry. The financial baseline stabilizes. Outgoing invoices go out immediately, incoming payments arrive faster, and weekly summaries provide total visibility over upcoming payables. This AI does not fire off financial transactions unsupervised. It drafts and queues the work for human approval. This setup provides total financial control, completely bypassing the agonizing friction of manual generation. This local hardware approach fills a precise operational void for businesses not yet ready to hire a full-time finance team or an AR specialist. Routine financial work is critical, always on infrastructure. It cannot survive as a forgotten task shoved to Sunday night. Maintaining a consistent financial rhythm on dedicated hardware helps close the gaps in the cash cycle. giving the business the visibility it needs to focus on its actual craft.